Welcome back. Last class, I asked you to identify the top 3 financial risks facing LagoSmart, and I want to hear your thoughts. Now, in today's lesson, we are going to look at exactly how these risks show up in financial statements. Because here is the truth. Every financial decision, every risk, every opportunity, it all ends up reflected in 3 documents. The income statements, it reflects there. It reflects on the statement of financial position, which is the balance sheet, and the cash flow statement. So these are the language of business, and today you're going to become fluent. So talking about risks, one of the risks is the inflation impact on cost of goods. Another risk is exchange rate risks on imported products. And another risk is credit risks from debtors. So please take note of that. Now let's start with the income statements. Remember, we are looking at understanding financial statements. What is the income statement? Now, the income statement, also called the profits and loss account or P&L, shows how much money, this is it. It shows how much money a business earns, how much money a business spends, and whether it made a profit or loss over a specific period, usually a month, usually a quarter, usually a year. Let us look at LagoSmart's income statement for the year ended 31st December 2023. The sales revenue is 480,000. Cost of goods sold was less, and it was 336,000. And that's how we arrive at a gross profit of 144,000. Then operating expenses like salaries and wages, rent and utilities, depreciation, marketing and advertising, other overheads was all deducted to arrive at, and you can see it was added to give us a total operating expenses of 64,800, which was subtracted to arrive at an operating profit before interest and tax of 79,200. Now, you can see the finance cost interest, which was also subtracted to arrive at our PBT, profit before tax, and income tax was lessened at 30%, and we arrive at this, and you get to see the profit after tax. So this is 480 million. Take notes, please. You can see the 3 zeros here. Now, revenue, first of all here, I want to walk you through the line, each of them. Whenever you see revenue, revenue is the total money LagoSmart or any organization received. So for LagoSmart, this is the total money they receive from selling groceries and goods. And we are told it's 480 million. But revenue alone means nothing without context. Now we subtracted cost of goods sold. Cost of goods sold is the actual cost of buying the product they sold. So this gives us gross profit of 144 million. Here we can come up with what is called gross profit margin, which is going to be our gross profit margin. Gross profit margin is going to be the 144 million that we have here, the 144 million divided by 480. Are you seeing? So if I wanted to get this faster through model we are building, what I would have done would have just been to say equal to our gross profits divided by revenue gives us our gross profit margin, which I can come up and put it in percentage. And you can see it, 30%. Meaning for every 100 naira of sales, 30 naira is gross profit. I hope you understand. That's what this 30% gross profit margin means. That for every 100 naira of sales, 30 naira is what? Gross profit. Now, after deducting expenses, operating expenses, which I said salaries, depreciation, and all this, we get operating profit, which is also called EBIT, earnings before interest. EBIT stands for earnings before interest and tax. And this is 79.2 million. We then subtract finance cost. The interest on LagoSmart's 30 million naira loan from Access Bank. Remember, there was a 30 million naira loan. Remember in lesson 1 from Access Bank was removed, right? So after tax, their bottom line is what? Look at their bottom line here after tax. 51,765,000. Can you see it? That is their net profit for the year. Now let's look into that of the statement of financial position. Let me use the new nomenclature instead of the old nomenclature. Statement of financial position. Okay. This may be, let's see if it exceeds. Okay, financial position. Why the income statement is statement of financial performance. Take note. Now, the balance sheet or the statement of financial position, it shows what a business owns. So what a business owns is what we call assets. And this is the statement that shows it. And also shows what a business owes. Remember, asset is what the business owns, OWNS. And it shows what the business owes, liabilities, OWES. So for assets, it is owned, but for liabilities, it is owed. Do you understand? And not only that, it also shows what belongs to the owners. And that's what we call equity. That's what belongs to the owners, equity. So all at a single point in time. You can see them here. All at a single point in time. There is a golden rule here. And that golden rule is simply assets equals liabilities plus equity. Always. This is a golden rule. Always. Assets must be equal to liabilities plus equity. Now, I want you to look at total assets. Our total asset is 174.5 million. Now, look at this total assets and also come and look at total equity plus this total equity. Look at total equity plus total liabilities, which gives us 174.5 million. You notice they balance perfectly, right? These total assets and total equity and liabilities balance perfectly. You notice? Don't they balance perfectly? They did. That is why it is called a balance sheet. Now, what does this tell us? LagoSmart is funded 64%. by equity and 36% by debt. When I look in here, I can see that they have 24.5 million cash. Look at their cash equivalent here. They have 24.5 million cash in cash. Look at their stock. Their stock is 42 million. Now we want to check if that is moving well. And if we come down, their debtors. Their debtors. Their debtors are 18 million. Yeah, trade receivables, 18 million naira. Meaning some customers owe them money. So we need to know if those debts are being collected on time. Now let's go to cash flow statements. Now, there is a common mistake many business owners make, and I want to clear it. They confuse profit with cash. And we need to know that you can have a profitable business that runs out of cash and shuts down. The cash flow statement resolves this confusion. It shows cash movement across 3 activities. The first activity is operating activities. The first activity is operating activities. This is the cash flow statement. Operating activities. I hope you can see that. Now, operating activities contains cash from day-to-day business operations. The cash flow statement also shows cash movement from investing activities. Now, investing activities has to do with cash spent or received from buying or selling assets. The cash flow statement also shows cash movement across financing activities. So for financing activities, these are activities that involves cash from borrowings, repaying loans, or paying dividends. Now, if you look clearly here, you will find out that LagoSmart made a profit of 51.76 million. Profit after tax here. Can you see it? They made this 51.765 million. But their operating cash flow is what? 55.36 million. Slightly higher than the profits. Why? Because depreciation is a non-cash expense we added back. Now, which is this? Now, after investing in new equipment, yeah, and after repaying loans, yeah, their cash went up. Can you see that their cash went up by what? 20.36 million. This confirms the closing cash balance on the balance sheet of what? 24.5 million. Everything ties. So if we go to balance sheet now, you see that the closing cash balance is actually what? Look at it. Can you see we have a closing cash balance on the balance sheet of how much? 24.5 million. Can you see it here? And this confirms it with the closing cash balance we have here on our statement of cash flow. So today we have covered all 3 financial statements: income statement, statement of financial position, and cash flow statements. I hope you know how they connect. Profits on the P&L fits into retained earnings. Okay, don't forget the profits. This profits on the P&L fits into retained earnings on the statement of financial position. You can see retained earnings on the statement of financial position. Cash on the balance sheet is confirmed by the closing balance on the cash flow statement. This cash on the balance sheet here is confirmed by the closing balance on this cash flow statement. So in lesson 3, we will go deeper into what is known as financial analysis. Financial analysis. Financial analysis. Financial analysis has to do with ratios, trends, and using these numbers to make real business decisions. So I want you to be ready. So while you prepare for that, I want to give you an assignment. And this is the assignment. Calculate these 3 ratios from these LagoSmart financials. Calculate these 3 ratios. So check the course folder, you'll find these financials there. Calculate these 3 ratios and bring your answers. Ratio 1 is current ratio. Ratio 2 is net profit margin. Ratio 3 is return on equity, which is ROE. So I want you to do these assignments. See you in the next lesson.